get lots of cards but they sit dormant, or if the business model is not, if you don't have a sound business model where everyone, even the smallest of the merchants, makes a little bit of money along the way, people stop investing and it starts to sit dormant, or people don't use their accounts, and that costs a company like Visa money, and then no one's investing in a new service as times change. We've seen this with many initiatives around the world. A good idea, but they don't think about the whole ecosystem. So it's about creating accounts, and it's about creating places to use them. For that, including small businesses, the mom and pop stores, the supermarkets, the places where you spend every day, that is really important, and that creates a full ecosystem. It's not only that. There are things that are beyond, or Visa is not solely responsible for, but that are as important to the ecosystem. So the first is the policy environment, right? Having that right policy environment is really important, and especially with the digital age. So you can introduce digital tools, but if you don't have, for example, the laws that permit someone to open an account electronically, and the electronic signature, no one can use it, the opportunity of digital. And in China, maybe this is less important, but in some other countries, very important. Basic things like the communications network, the electricity network, other kinds of infrastructure, a credit bureau, all are really important to an ecosystem in which the financial services can really spread, be low cost, be useful. So we work on those. We don't run credit bureaus, but for example, very happy that a partnership that Visa had more than 10 years ago with the International Finance Corporation supported the creation of credit bureaus. So the first private credit bureau in Egypt came out of that partnership, and it's still thriving today. So that was the ecosystem question. And the second part of your question was about the different countries. And there, absolutely. There are things that are in common, right, around payments, but the actual product or service has to respond to the local need. And there we work really closely. So Visa doesn't actually have a relationship with me. Even my corporate card, it comes from a bank, or actually I have two Visa cards. I have my corporate card, which comes from a bank, and I have my personal card that I've had for many years that comes from my credit union, because I'm a member of a credit union, not a bank. And so there, it's up to those partners to bring the standards that Visa has, right? But then think about who's their customer and designing the right product and service. And we often help with that as well. But it has to be tailored. Really, really has to be tailored. And that's part of what my team does, and part of what our team here in China is thinking about as well.
Could you please give us some examples, such as how Visa does in Africa compared to the United States?
Sure. Okay, this is really fun. Okay. So, sorry, let me just take a sip. Let me start with Africa. Remember I mentioned the market vendor in Nigeria? I didn't make that up. So when Visa says client, we actually mean the bank, right? Because that's our customer. We have a bank that we work with in Nigeria called Diamond Bank. And with another partner, a really wonderful nonprofit group called Women's World Banking. Diamond Bank is a member of them as well. We were thinking about how do you better serve women, and how do you better serve small businesses in Nigeria? Right? And Visa, we have a big focus now on enabling small business as well. But Women's World Banking helped us figure out that all these women who work in the marketplaces, right, they have a stall in the market and they run it by themselves, and they sell fish, or they sell clothing or cloth or vegetables or eggs. They never go to the bank that's right across the street. And they're like, They're functioning in cash, solving everything cash. So how they do this, and they pushed Diamond Bank and said, you've got this huge potential customer base out there. These women have real needs. They're business owners, they're heads of household, they function in cash. Not only can they not leave their stall because they work by themselves, they don't want to, they're terrified to come in your bank. It's formal, and this was a lower end bank. So we all worked together and encouraged Diamond Bank, and there's a really wonderful CEO who's very interested in this. And they developed a model that builds on a local custom. There's a local custom, a susu collector, who would go around to homes and stores and collect your money as savings. And Nigerians pay the susu collector to hold their money for them. They pay for savings. That's how valuable it was. And it's completely informal. There's no contract, there's no guarantee. And so they said, okay, how do we, let's take that model. And they developed at the point where the bank agent goes out into the marketplace to collect savings every day from these women. And then this is where we added in technology and say, well, how do you do better than the susu collector? And with technology, with mobile phone, they were able to make an instant receipt. So the women knew, right? And then you have the enabling environment in Nigeria that allowed the agent to open an account for those women. So the women didn't actually have to go into the bank. And that sounds very basic, but this is actually a huge policy innovation.
Yes.
Right? And so many of these are coming from the South. They're not coming from the United States or Europe. And this is why I love this field, right? So that's a really great collection. Now we're working with Diamond Bank again to say how can we help these women gain access to other services, right? They have this history of savings in the bank, so how can we help them either additional revenue as becoming a bank agent, a cash in, cash out, or other loans, other services. A second example is in the United States. Very different needs there. But we have a pretty persistent challenge with people who are both unbanked, about 6%, and then an even bigger problem called underserved. So they have some access to formal financial services, but it's not really great and it's really expensive. And if you lose a job, you sort of shut down your bank account because it's too expensive to keep, right? That's a really big category for us, people who come in and out of employment. Immigrants is another. A lot of the underserved for us tend to be minority households, so African American, Hispanic, Asian immigrants who just aren't part of the same access of communities. And so we started thinking about how do we help them avoid getting pushed in and pushed out and build up a history. And one thing that's very important in the United States is the credit history, the credit bureau. In the United States, when you apply for a job, very often employers will check your credit history because they've found that people who have high credit scores are good employees. They turn up to work, they stay in their job. It sounds really
yeah,
sad.
it makes sense.
Yeah, but if you don't have a credit history, these big companies, you know, the really big companies, you apply for a job, they don't even look at your resume. They take you off the list because there's someone else. So it really affects your livelihood. But then also, if you don't have a credit history, you have to pay more for loans because you have to go to the payday lender or informal. Yeah. So we just piloted, working with some partners, and then have been rolling out what's called a secured credit card. And so the way it works is quite literally, you take 300 of your own dollars, which is a lot, and you put it in an account. And with that, then the institution, the bank, gives you a credit card. And every month you're supposed to pay off the loan. And you only can charge up to $300 on that card initially. And if you don't pay it immediately, it takes it from that amount of the account. So in a way, you're guaranteeing your own. There's much less risk for the bank. But because it's a formal credit card, it's different than just having a savings account. You're building up that credit history. And that goes formally into all the systems. And then that amount slowly increases. And then a really important part of the program is the transition, the graduation to a regular credit card where that money all of a sudden goes back to you. You don't have to keep it there. And so again, it's those products and services. What is the need? And then how do you have the right institutions? Right? So we work a lot with local credit unions who have a community relationship and are trusted to reach that group. So every country is really different.
Yes, actually, this is the question I want to ask about the credit scores, because you know,
Yeah.
China now is facing a serious problem about establishing this national system, because we have this financial inclusions for years, but because of this lack of system, so some people just get loans too much, and some people, yes, who don't have a credit card, they cannot get this kind of loans. So now China has a problem that we want to build this national system, and actually some small fintech companies, they have data, but they cannot provide this kind of service because they don't have this license plates. Yes, because there are some problems about authorizing about data privacy. So I don't know. You just share a very good example. I don't know if any more examples that when America at its beginning, so with some very bad databases, how do they start? You know, like China now, they have very fast development of microfinance, but they don't have very good databases.
That's a really great question, and one I cannot completely answer. I do not know how America's credit bureaus started.
Yeah, but I know Visa contribute a lot, right?
I can't even answer that. In terms of America's credit bureaus, I have had a lot of conversations in emerging markets, in prior jobs, about the creation of credit bureaus. My former job particularly, we did a lot of policy advising and conversations. And there are many different ways that you can establish credit bureaus. I think one of the big lessons, and government is really important, because ultimately government will send the signals about how it's established. One of the things that works in the United States is that the credit bureaus gather information from all different kinds of credit sources. And today, right, with the seamless experience, one of the things with this hyperconnectivity is there are all kinds of companies now offering you credit that you don't even know about as you pay for something. It's not just a bank and a loan. It's the stores, all these things that get linked up in an app. So it's all collected in one place. That is really, really beneficial if you have one centralized or several centralized collections for credit history. What's much more challenging is if you have credit reporting by institutional type, and thus as a consumer or someone checking it, you have to check all these different places. That's one of the big observations. There's also a question, should it be public run or private run? I think we've seen a lot of success from privately run credit bureaus, but again, the government oversight is really, really important. What's the protection of the data? Consumer rights around that data. In the United States we're having huge challenges, right, because a couple of them got breached. Big security breaches. So that's shifting. But I think Jennifer might be able to connect you with the person
maybe
more detailed. Someone more experienced.
Yes. I just find it's a balance because if you provide much service to people and without a good credit system, there might be risks. Yeah, but
you know what? But it's this. Let me comment on this. Not related to the credit bureau. The issue of over-indebtedness is a really, really big one. And consumer protection and enablement. And that's not only around credit bureaus, it's around the responsibility of finance. And there are two sides. Really important that consumers understand what it is they're signing up for and understand the products and services. And this is really challenging with consumers whose education might be limited, who have limited experience of business or of different services, financial services, who, it's just complicated reading all this. So that's again where both the regulator and the supervisor and the provider have an enormous responsibility. You can present a product and be really clear about the terms, or you can present 15 pages of small print that no one's going to read and say sign here. That's up to the provider. But at the same point, government can be very, very clear about that levels of responsibility, be very clear about things like deposit protection, insurance, deposit insurance, right? There are countries in Africa that don't have deposit insurance. Right? I mean, this sounds really silly, right? But like, you know, that's really important to protecting a smallholder. And yeah, so that there are a number of things that go together, and being responsible about that and not over-marketing are really important. But unfortunately, everyone has a role to play.
Yes.
So you have very rich experience in a global scope of the inclusive finance. So I wanted to ask you, how do you evaluate China's inclusive finance development?
So, well, we talked some about it. I think it's been pretty amazing. Honestly, right? This change that I've seen in my lifetime of, cash and everyone just going to the local state bank to all these products and services. The use of technology, right? Really, really interesting. Regulators at the forefront of thinking about these issues, and really thinking about products and services, right? The number of people who can come in. We met up in Jilin province. We met a man, I'm going to call him young, but maybe he was middle-aged, who used to work for other people growing rice. And then he said, wait, I can start my own business. And he now, he buys rice, but he mills it. And he can sell it all over the country. And he's like, yeah, people call me from all over, because he can accept a payment, right, over the phone, or I'm sure he has an app or a website. And he had really good rice, I think. And so that development is really great. And China is absolutely at the forefront of that. But as I said earlier, there's this big gap. So China has, depending on what statistics, and statistics are unreliable, 80 to 90% of the population has access to financial services. But that means there are more than 200 million people who don't. So helping to get the financial services out to those people, and also helping those, maybe I imagine there are other people who have one or two accounts but don't really use them very well. So it's these future challenges to think through of how do you get people the products and services they need that will help them in their life or help their business. So this is I think why we're all here today, trying to figure that out.
The last mile.
The last mile, and that really goes to understanding what's happening, and also understanding why aren't financial institutions in those places anymore. One of our partners, a nonprofit, commented a while back saying, there used to be more banks and financial services in most of the counties where we go, and now we're the only one there. So that tells you something about some people are pulling out. Why is that so? People, institutions. But it is about understanding the needs is one part. Then you take that understanding to develop or adapt products and services, increase the access, and I think technology will be huge here, the mobile phone especially, create the usage, and then building the capability, helping consumers, helping providers understand how to use a product or service or what those are for. That then helps them to make better use of what's already there. So that thesis, that hypothesis, informs a big program we have with the CFDFE, China Foundation for the Development of Financial Education, where we thought there's such a basically good infrastructure and overall high rate of access. How can we help people very quickly take better advantage of what's already there, right? Then at the same time, understanding needs and help institutions develop even better products. That takes a little more time. So the first part, we developed a really big capacity building program And so there's a demonstration zone that this foundation created in northeastern China, Heilongjiang, Inner Mongolia, and Jilin, in the poverty-stricken counties, to help reach 5 million people with just basic information about what the financial products and services are and how they can use them. And not the presumption that you can tell everyone everything they need to know in an hour, but the idea that once people have a little bit of understanding, they get more interested. And once they start to use something, then they go seek more information, and they know where to get it. So then there's some other programs that we've been developing to think about how do you use social media, and how do you couple in-person trainings with digital trainings to help reach more consumers, and help them take advantage of what is already there. So those are just two of the programs we have. But it's challenging. It's not easy.
Yeah, what's the biggest challenge you found in the process?
What's the biggest challenge?
And not biggest, just challenges. Just say that. Don't have to pick out. Just
No, that's actually a really good question to be asked that way. I think one, trying to understand exactly what's there and what's not. China has such good data on so many things, right? Really, really impressive, down right to household and counties. And when we started this program, poor Iris, I don't know if you've met my colleague Iris. When we started, I would call her from the United States all the time and say, but what does the data say about this county, whatever? And she's like, there's no data. I was like, it's China, of course there's data. She said, no, there's no data. Not at that level. And I said, how can that be? Right, this is China. She said, well, there are some groups that are thinking about it. So,
Demand side data.
yeah, but to understand, right, the same kind of data that China has on poverty, for example, very, very disaggregated by women, by men, by different sectors, by counties. On the use of financial services, it doesn't have. And the leadership is very aware of that as part of the National Financial Inclusion Strategy. They said, well, let's think about what the indicators should be, right? And COFFEE's have been one of many groups thinking about that. But we can be a little impatient. So we said, let's go out and find this out. And this is how, with our partners, COFFEE and CFDFE and Chongqing Finance College, we did this survey in 19 or 21 counties? 19 counties, thank you. In the 3 provinces, so Inner Mongolia, Jilin, and Heilongjiang, 3,000 people. And more than 100 questions about what financial products and services they use. You know, it's hard in a survey, but we want to get to some of their thinking and their understanding, and that's just been so tremendously insightful. And it's been so insightful that CFDFE, and it was definitely a learning curve for all of us. How do you design a good survey and use the data? They're now replicating that on their own in a whole number of other counties across China, which is just, it's really exciting, and it brings up really interesting data. And then we've also partnered with the World Bank, who was asking very similar questions, didn't have the data, and so we just started a partnership with them, not formally. Am I allowed to mention this? Okay, sorry, I don't think it's been formally announced. All of a sudden I realized, I'm like, oh wait, hold on. So the World Bank is as part of their partnership with the government and the PBOC, what they want to do is say, okay, our partners did this great data, 3,000 people, 100 questions, but it was one time. So they're going to conduct a study that's called Household Diaries. And they're going to go back to the same household for week after week after week and ask the same questions about use of value and use of money and use of financial services over a 6-month period. And you get a very, very different picture. So they're going to go very, very deep. And I think it's going to be really interesting to see, right? And then the objective is, how do you use that to inform design of products for the government, for policy, right? For other kinds of interventions, right? Saying, what are these adding up to? We have another program that we've also started with the Development Research Center, the State Council, asking the same questions. So it's 2 years of research, bringing all these studies together and saying, how does this ladder up to actually alleviate poverty, right? That's what we're trying to do. Our goal is to support the poverty alleviation. So, great, you can take a loan and buy a television. Maybe that's helping you, do something. You're learning more through it, but like, how does it create efficiencies? How does it contribute to GDP growth? How does it change and affect a community?
Mm-hmm.
So.
Yes, that's really important work because many people in Chinese they don't want to do this kind of job, like to investigate how do you use this kind of money. Yeah.
So this is something we've been getting really deep into, and Visa does into, and I'm going to be getting even deeper into in some work I'm doing at the global level going forward, is understanding first, like, you do X, you do something, what outcomes does that lead to, or what immediate reactions, but then how does that ladder up, and how does it trickle down?
Yes.
To create poverty. And it's really interesting that we've seen the last 10 years of financial inclusion, the efficiencies, how financial services contribute to poverty alleviation and growth. And there's several different streams, right? There's an efficiency level. You save time, you save money, right? Because you don't have to travel to pay for something, because you don't have to pay, the fees go way down. And that's for households, for businesses, and for governments. Huge savings for governments, right? But then that translates into productivity. If you don't have to leave your field or your store, you can create more income and revenue, and that contributes to GDP. But then also all these, one, the cost savings from government, but two, you're bringing money into the formal system, right? A lot of activity or cash stays outside, but when it gets into the formal banking system, it can be intermediated, and it can be reinvested. And that's where you get even bigger gains in productivity and growth. And that to me is fascinating to take apart. We have some studies on that. But
Yes.
and some other groups. McKinsey, nothing related to Visa, did some really interesting work on this as well.
Yeah, because I just finished interview with Mr. Murdoch, and he has this
diary,
the financial diaries in America.
Yeah. Well, Jonathan was one of the first. Jonathan and I go way back. He did the original financial diaries in India, South Africa, and Bangladesh.
Yes. I hope people can do this kind of research in China. Yeah. So I finished.
Well, the World Bank is doing that.
Yes. I mean, I hope they're much more, and by Chinese, not only by the international organizations or something like that. Yeah.
Yeah. Or it'll be carried out by Chinese.
Yeah. I think I finished my question. I don't know if you have.
I think almost done. Any new plans for Visa to promote inclusive finance?
Yes. I think I've talked lots about what we're doing here in China. We are really deeply committed to the work that we've been doing. We're really pleased that we made a commitment to the World Bank about universal access to financial services. So we said in 2015, we said we would bring another 500 million people, help them gain first-time access through a Visa payments account. So we're really committed to that. We're well on track. In 2 more months, we'll run the data for this year, but as of the end of last year, we were 281 million in the first couple of years, and that's increasing. So that remains really important to us. At the same time, we want to do more, and this point about the full ecosystem, the part about small businesses, micro and small businesses, helping them thrive. Micro business is really important to family livelihood and incomes and jobs. Small businesses, really important in emerging markets. That's where most of the jobs are. Their contribution to GDP varies. China, you have huge enterprises that are the real drivers of GDP. But in smaller countries, those small enterprises, they contribute much more as a percentage of GDP, up to 60%. So we've just started a company-wide initiative to do even more around micro and small businesses. A year ago, we created a foundation, so purely charitable, not related to the business. That will have an exclusive focus on micro and small businesses, but then the company as well. would be looking to say how can we help them thrive.
Great. So, feel free to reach out.